This meeting is being recorded.
There you go.
Good?
Yep.
I'll trim at the beginning, but yeah. All right, welcome everyone. Today we have Armando, the expert on mortgages, lending, everything rates. So I wanted to interview him so that way you guys can kind of get an understanding of what the process is like and ultimately make the best decision for you and your family when it comes to the biggest financial asset that you're going to be purchasing. So Armando, thank you so much for being here today.
Absolutely, man. Thank you for having me over.
No, of course. So I just wanted to dive a little bit more into the insight and provide as much value to our audience. And I wanted to see, what does the mortgage process look like? What is a mortgage?
Well, the mortgage process itself is actually very simple if you have the right team to support you through the transaction. Especially, it also, I mean, of course, it depends on your background or your financial background. Like if you're W-2, it's going to be completely different than a person that's self-employed or a person that doesn't have, let's say, consistent pay stubs that, you know, everybody has a different type of loan. Like everybody has a mortgage is not a shoe that fits everyone. So what we try to do as mortgage advisors is get the best loan for you, that fits your needs. Um, so a mortgage basically is money that you are getting from a bank or a financial institution for you to purchase your house, right? And it's something that you can have, for 30 years, for 15 years, for 20 years, 25 years. Just think of it as a like whenever you buy a car, you get a loan for your car. Same thing for a house. It's just a little few extra steps to, since it's a bigger amount of money.
All right, awesome. And can anyone apply for a mortgage? Do you need to be a resident? Like, I guess, where are the limitations there?
You know, one of the things that I see a lot of real estate professionals post on social media a lot is like, why rent when you can buy? And that's one of the phrases that I kind of disagree with, because the truth is not everyone can buy.
Hmm.
If it, I think the hardest part of my job is telling people no, you can't
Yeah.
right now.
Yeah.
But also one of the best things that we do is that we don't just say, hey, you can't buy right now, best of luck. No, we will actually get you on the path to get there. Maybe it takes a year, maybe it takes 2 years, and it's gonna be it's gonna be effort from whoever's applying, and from us as well. Like we'll show you the roadmap, but you have to walk it. You have to be the one to, like, for example, if you have collections on your credit report, it's up to you to call them and pay those off, clear your credit, make sure that your utilization is low. So not everyone can apply for a mortgage, to be honest. I mean, everyone can apply, but not everyone's going to get approved, if that makes sense.
Yeah, not everyone's going to qualify. Yeah.
Oh, absolutely, absolutely. I mean, and that's with everything. I mean, it's like if you go to American Express and not everyone that applies is gonna get in with American Express. Maybe they need to get a secure credit card instead. But I don't. I think those are things that have a solution, man. Like if it's a credit aspect or income aspects, there are different types of loan programs. For example, like people that have a business. Let's say you have an LLC and you don't really have pay stubs, but you have money coming into your account. We do have what we call is non-qualified mortgages. So non-qualified mortgages is anything that's not an FHA, conventional, or VA. So like a bank statement loan,
Wow.
that's a non-QM. Hard money is non-QM. Foreign national is non-QM. So there are loans for everyone. However, like I said earlier, not everyone will qualify, depending, maybe they need to work on some things, and that's what we're here for as mortgage loan advisors, to coach them, and hey, you're not ready right now, but we'll get you there.
Awesome. Awesome. So for someone who's looking to buy in the future, what actionable steps could they take today so that way they can get to that point where they can qualify?
Well, the first thing I would say is being aware of what you need to work on, right? You cannot make improvements if you're not aware of the things that you need to
Mm-hmm.
improve. So for example, if you have a low credit score, then work on your credit score. If you have the income, you have everything else, but your credit is not where it needs to be, then the only way you're going to become aware of that is by meeting up with someone like me, let's say, and I'll tell you, hey, Jose, your credit, it needs a little bit more work. So let's do this, and then in 3 months from now, we'll check back. We'll revisit the application. If it's an income issue, or maybe you need to save more money, or um, In my opinion, everything qualifying for a mortgage is easy as long as you follow the steps that you need to follow and you're aware of what you need to fix. Of course, you can't you can't go in a direction if if you don't know where you're going.
Yeah, yeah. You have to know where you are almost in anything in life in order to improve it. So that absolutely
Absolutely.
makes sense.
Absolutely.
So let's say someone starts going through the application process. What do you as a lender look for before you decide, hey, okay, this person is qualified?
Yeah. So there's I call it a table. So for a table you usually need four legs to hold the table, and those four legs are your credit score, you know, your income. We gotta make sure that you have an income that is you gotta remember you're borrowing money, so the bank needs to know that you can pay this back. And how are you gonna prove this? With income.
Yeah.
Then you have bank statements. We want to make sure that you have the money for the transaction, because it happens to a lot of people. You have the credit, the income, but then you have no funds for a down payment or for closing. We do have help. We have assistance programs, but you gotta bring your own money to the table as well. It's not a get a free house
Yeah,
type
yeah.
of deal. You know what I mean? And then the last thing we look at is your debt to income ratio, which is I think the number one killer for deals right now,
Yeah.
especially down in South Florida, because I like to think that I grew up in Texas, man, and Miami is a different level of um people like nice things in Miami. So I'll pull a credit on someone and they'll make, let's say, $50,000 a year, average salary. They make $50,000 a year, but then they have a car payment that's $900. That'll kill you right then and there. That like, is it the car or that? What do you want, the car or the house? You know. So it's all about the priorities you have, man. If you're not making that type of money your debt to income ratio is really important in the process of applying. So the less debts you have, the better the better chances you're gonna have at qualifying for a bigger amount, if that makes sense.
No, yeah, that absolutely makes sense. And I've never heard that about the table. That's very cool. That you have there's
Yeah,
the four
that
pillars there.
those are the four legs that make up the table. So income, credit, the funds, and your debt to income ratio, which is like your liabilities compared to how much you make. So
Fantastic.
for example, I'll make a quick example. So if you make 50,000, let's say you make $60,000 a year, that means that's $5,000 a month, right? The max debt to income ratio, or the DTI ratio, that we could do is, let's say, 49.99%. That means half of your income. That means that 5,000 now just became 2,500. That's the most debt you can have, right? But you should know this. I mean, with $2,500, what are you gonna pay in Miami? It's gotta maybe be an apartment or
Yeah.
small condo. But what happens is the following. Let's say you have $2,500, to play with, but then you have a $900 car payment. That just went from 2,500 to 1,600.
Yeah, it really drives you down.
And then let's say you have credit cards, or you have another car, or you have the more you have on your credit, the less amount you're gonna get from the bank, just because your debt to income ratio is already capped. You know.
All right. So let's say someone is they have bad credit or they're trying to improve it. What can they do in order to improve that?
Honestly, credit is the number. It's one of the easier things to fix. I mean, especially there's so many people, there's so many companies and people that offer services to, hey, let's fix your credit, in 2-3 months. And I do believe it because I've seen it happen. That I qualify someone. Hey, your credit score is at 550. Sign up with the program. I have partners that people that I partner up with that I'm like, hey, I'll send you this person, and then they'll give me updates like, hey, they paid this down, their credit score just went up 20 points. But credit is one of the easier things to fix in the like, if you have everything else, if you have the income, the funds, everything else, the credit is the easiest thing to fix, because all you got to do is really, if you have credit cards, make sure they're at 20% utilization rate, and make sure that whatever else you have, like for example, if you have a car, I mean, there's nothing you can do much about a car, but make sure you don't have a $900 car payment when you only make $50,000-$60,000 a year. That, to me, that doesn't financially doesn't make sense. So
Absolutely. So now going back to the credit. So now we know the process. So what should they be aiming for, right? So like what do you consider a good credit, a good down payment? What should people be aiming in terms of that?
okay, so that's That's a blurry question because we're happy with as long as you have 600, we can get you a loan. However, what you asked me, what I consider a good credit score, anything above a 700 to me is gold. I
Okay.
mean, if you have over a 700, that means that I can get you better pricing on rates. I can get you a lower interest rate most likely. So the cutoff, just so you know, the cutoff is a 680, 680 and above. That'll give me better rates. 720 and above will give me better rates. 770 and above will give me better rates. So there's certain brackets, of credit scores that
So okay, so that's perfect. So you said 600 is the bare minimum, right?
600 is the bare minimum that a financial institution will say, okay, you know what, we'll give you a loan. Of course, some people advertise 580 and whatever, but it's really hard to get those loans. And to be completely frank, though, instead of paying 3.5% down, you'll get probably 10 or 20% down. You'll get asked to do that. Put a bigger amount
Yeah, it's the risk.
down.
It's the risk factor.
Exactly.
Yeah.
It's funny you say that because really lending is all about risk assessment. How likely is this person to pay this back? That's basically what we look at. Like, we'll give you the money, but we got to make sure you can pay us back.
Great. So now going on to this, let's say that they know that. How does someone go about choosing the lender? What do they do? What should they look for in the lender?
It's very similar to when people choose a realtor. you know so I always tell people to choose a lender that is full time, someone that can answer your phone calls. you know I mean, I answer a phone call. I mean, it's Saturday, it's 9:47 a.m. and we're on a call.
Yeah.
I always tell people, make sure that's, whoever you choose for either real estate or lending, that they have the time and they'll have the what do you call this, the I guess the energy and the time to put into you as well. Because when you have a client, man, problems don't wait for your schedule. Like sometimes I'm taking calls at 6 in the afternoon on a Sunday. But I think that's one of the number one reasons, because remember, rates are what the rates are. Banks we can't really change rates. We can have special programs and everything, but when it comes to choosing your lender, most likely everyone can do an FHA loan, everyone can do a conventional loan, everyone can do a VA loan. But what's going to make a difference is of course the team that let's say your lender works with. Like, for example, in-house underwriting, in-house processing. That's a big deal. That means your file is going to get looked at within the company. It's not gonna get outsourced to a third party. Like, the whole company is invested in your file.
Yeah.
Someone that's full time, that has a good team, that is gonna get it done, because it can get done. Like I said, it can get done with everyone, but it's the process won't be the same. It won't be as smooth if you're working with someone that maybe isn't doesn't answer your phone calls.
Makes sense.
That Yeah, that doesn't like, hey, maybe a price was supposed to be ordered on Monday and they don't order it till Thursday. I mean, that holds you back 3 days. Instead of closing in 14 days, you're closing in 30 now because your file is moving around too much, between hands. So I would say a good team and someone that's dedicated to the profession.
Awesome. Yeah, for us, definitely someone who thinks ahead. So like, if there's proactive, don't wait for the
Absolutely.
issue to come up. There's always going to be issues, but if you're the kind of person who thinks ahead and tries to target it before it becomes a big monster, it
Absolutely.
always makes it smoother. Everyone's happier. You're in control. So that's one of the big things.
100%. You're 100. You nailed it, because I'll tell you this. I'm at a point out in my career that basically, when I get a new application, I already know what they're gonna ask me for. Like,
Yeah.
I already know what underwriting is gonna ask me for. So, like, let's say I pull up your credit and it shows that you've lived in 3 different addresses in the last 24 months. I'm already gonna create that letter of explanation and send it to you. Listen, I need you to explain this.
Yeah.
They're not asking me for it, but I know they're gonna ask me for it. And
Yeah.
by the time I submit your file, it's already done. It's already, all the letters are there. Your W-2s are there. That's why it's so important, man, to, whenever your lender asks you for documentation or documents, I'm sorry, it's very important that you send them right away. Like, you need to be, I think as a grown adult, you need to be organized. Like, you need to know where your W-2s are. You need to know where your pay stubs are. Because, I mean, those are things, like, if you're planning on buying a house, that's 100% one of the things that, some of the things that they're going to ask you for.
Yeah. So for our buyers, we give them a packet. And one of the things that we tell them is that any forms that the mortgage lender needs, you need to send it within 24 hours, because we don't
Absolutely.
want to be outside of that financing contingency because you didn't send the right paperwork. So
Uh-huh.
one of the things that
Yeah.
we start right off the bat is to help the buyers. It isn't just, just for us and for the lender. It's to help them.
Absolutely. Listen, I don't enjoy collecting documents. I mean, that's what I don't wake up one day and be like, you know what, I'm gonna ask Jose for 30 things today. Like, I don't wake up with those intentions. If we ask you for it, it's because we need it.
Yeah, no, absolutely. Yeah, it's so funny. And one of the bigger questions that we're getting is what's going on now with the market? What's going on with rates? So do you have
Yeah,
insight on that?
absolutely, absolutely. Look, and I'll tell this to people. And like I said this earlier. The phrase that I don't like and that everyone uses in real estate is like, why rent when you can buy? The truth is, not everyone can buy. However, what's going on with the market right now is that, of course, we just came from a pandemic. We just left the pandemic. We just left a really hot seller's market.
Yeah.
And if you were out on the field, if you're looking for a house, you know that if you went to an open house right now in the morning, 8 months ago, there was a line outside of the open house. You have to make an appointment, and basically you would list the house, and then the next day you already have like 7 offers.
Mhm.
People were offering above asking because the rates were lower. People have more money because they have more buying power. So just FYI, a little sidetrack: the higher the rates go, the less buying power you're gonna have, and the
Yeah.
lower they go, the more buying power you're gonna have. So there's more competition on the market. 8 months ago, there was more competition on the market. I am the type of person that I am not rate sensitive. I always tell people I don't sell rates, right? The rate is what the rate is. I mean, of course, we're always going to try to get you the lowest rate, what you can afford. If you can afford it and we've already done your numbers, okay, we can do that. But I'm not rate sensitive, so we came off from 8 months ago, the rates being, 3%, 3.5, 4%, whatever. Now they're at like 6.5, let's say, you
Yeah.
know, so it's a big jump in 1 year. However, we expected this, just we didn't expect it so fast.
Yeah.
But what that did is the market it made the market shift, and there's no more lines at the open houses. You
Yeah.
know, there's no more. I'll pay you $50,000 over your house. There's no more of that. Now there's sellers credit. The sellers are giving credits to the buyers so they can close. So you can clearly see the shift in the market of how the rates affected the market. Does that
Yeah.
make sense?
Yeah, I couldn't agree
So
more. Absolutely. I see it every single day, and I see what's going on, and it's incredible. But it's great to see it from your perspective also. So
yeah, 100%.
yeah, so when there is a shifting market, and let's say we sign a contract and market, and the interest rate shift and all that stuff, what does that mean for the borrower? What is
That's
there?
that's a great question. It's very important people understand this, that once okay, so let's say you go at an open house, you love the house, and you tell your realtor, you tell Jose, hey Jose, I want to put an offer on this house. And you write an offer and you send the offer and it gets accepted. You go under contract officially, right? Once you go under contract, let's say you put the contract to close within 30 days. That means that we can lock the rate for 30 days. You know what I mean? So you can lock your rate for 15, 30 days, 45, for 60 days. There's some programs that let you extend that, but most of the time you lock it for 30 days, maybe 45. Um, so once you lock your rate, is very it you need to lock your rate the moment you get a contract. Why? Because if the rates keep going up, which is that's what they're trending, they're going up. So it's important for you to lock your rate, because if you lock it and then they shift, the rates go up again, you already locked, you already stayed at the
Yeah,
rate
you're
that
protected. No, it makes that
exactly.
absolutely makes sense, and that's why we have the process, and you guys have the process of getting all the paperwork, locking it in, and then going through with the transaction.
Exactly. And exactly. So you need to lock your interest rate in. And to be completely frank, I mean, this whole year we've all been happy about locking our rates,
Yeah.
because if you locked your rate, let's say in May, and then you close in June, by June the rates were already, they had gone up already 1% or something like that.
Yeah.
So it's very important that you lock your rate as soon as you get a contract. You should lock your rate for sure.
Great. And so let's talk about specifically maybe some programs that you offer. Do you have any special programs that people should know? Anything for first-time home buyers, VAs, homes that
Absolutely.
need a lot of repairs? Like, is there anything that you guys offer in specific?
Absolutely, yeah. So we actually have, since we're a national lending company, we have a ton of programs, man. Honestly, we have. I'll just mention to you the newest one that we're gonna roll out in January. So a month and a half from now, in January, we're gonna start rolling out an internal down payment assistance program. Now, I emphasize on internal because a lot of the down payment assistance programs, like the Hometown Heroes, Chinoa, those are all third party. Like you send the loan somewhere else for them to get the money, right?
Yeah.
However, with the internal program that we have for my company, it's company's money. Like we don't have to send the loan somewhere else. We don't have to depend on the government to give us the money. It's an internal down payment assistance program that we're gonna have between January and March, and it's on a first come first serve basis.
Yeah.
Think of it as a clearance sale. So we'll give you 7,500 or 10,000 if you are first responders, like if you're a nurse, if you're a police officer. So that's $7,500, man. That it could be your closing cost covered. It could be maybe, let's say, half your down payment. So there's a ton of assistance out there, man, that you can get with especially first responders. I mean, they have a lot of great benefits. But even if you're not, let's say you're not a cop, you're not a teacher, you're not a first responder, you still have $7,500 that I think about it. I mean, if you're buying a 400K home and you do that at 3%, that's a $12,000 down payment.
Yeah.
I'm covering 7,500 of that. So you're talking about
That's
5,000,
incredible.
55. Yeah, $5,500 you're gonna have to put on your own plus the closing, of course. But I'm covering $7,500. That, I mean, it's all internal. We do it here. You don't have to fill out a different government application or go through the state or whatever. It's all internally done through my company.
No, that's amazing. And I didn't know that they had that program coming up. So
Yeah,
that's
it's
great.
actually, yeah, it's something new. There's always down payment assistance, and I want to make sure that people understand that this may sound a little harsh, but there's no such thing as free money in one way.
Yeah.
Usually, when you do down payment assistance programs, they come with a different rates. Maybe they come with maybe they're not forgivable. Sometimes it's a second mortgage on top of your house. So it's not free money. I always tell that to people. It's a way to get you in a house.
Yeah.
It's a way to get you in a house. You can pay the extra down payment assistance. Now, for example, Hometown Heroes is let's say they give you 5% or $25,000. I don't know if you're familiar with the program,
Mhm.
but they give you up to $25,000 on a down payment assistance. But that's a second mortgage on your house,
Yeah.
meaning that if you want to sell it, or let's say you bought your house at 7% interest rate, and then you want to refinance when they drop again, you need to pay that $25,000.
Yeah.
So that's why I always tell people it's not free money. Don't think of it like, oh, I just got assistance and I don't have to pay back. No, there's some forgivable loans, but it always comes with strings attached. So it's a great way to get you in the house. And I always tell people, if you have your own money, use your own money.
Great.
'Cause
And what if let's say they want to get to a house, but it has a lot of repairs? Do you have any programs for that one or
well, you gotta keep in mind that when you're doing a mortgage, you're doing a transaction. There's gotta be inspections done,
yeah.
and if the property cannot be insured because of the damages in the property, then there's no way a bank will
Just
give
give a
you
loan.
money. However, there are loans like I mentioned earlier, non-QMs, non-qualified mortgages that don't abide by those guidelines, like FHA or conventional, whatever.
Mhm.
So you could do a hard money loan. You could do something else that let's say doesn't require an inspection. But those are different types of programs, different types of fields that the common people don't do. The
Yeah.
common people do. Most of the people do conventional FHA loans.
Yeah. Perfect. Well, I think this has been fantastic, very insightful. I learned a good amount.
I
Armando,
hope so.
if someone wants to get a hold of you, what's the best way for them to get a hold of you?
Yeah, so I am just FYI, I work in Doral. My main office is in Doral, so I'm pretty centered to everyone. Like if you're
Mhm.
coming from Kendall, if you're coming from Hialeah, Westchester, I'm very maybe a 20-minute drive max from everyone. So I'm in Doral, and the best way to reach me is through my cell phone.
Okay.
I always carry my cell phone with me. It doesn't matter if it's 10 in the morning on a Saturday. It doesn't matter if it's Sunday, 6 p.m. or Monday, 8:30 in the morning. I always answer my phone because I think of this is all I do, man. That
Yeah.
this is my life. I breathe, eat, and everything else I do with mortgages, like this is what I do. So 305-399-4850, that's my cell phone. And if you like some more information, I'll give you my direct email and everything as well.
Perfect. And they can call or text you at that number.
Call, text me, email me, send me a fire sign if you want.
All right. Well, perfect. Thank you so much, Armando. I hope that the viewers get incredible. I thought this content was incredible to help them out if in the future they do go ahead and decide to buy.
Absolutely, man. Listen, like the mortgage process really isn't complicated. It's like I said earlier, it's all about being aware. If you're not ready right now, let's make you aware. Consultations are free. It doesn't cost you anything to make an appointment with me, to come into my office and be like, hey, Armando, I don't want to buy right now, but I want to buy 6 months from now. If you're planning on buying 6 months from now, you need a consultation right now.
Yeah.
That way 6 months is nothing, man. Even a year is nothing. A year goes by quick.
It's huge.
So if you're planning in the near future to apply to get a house, you know what? I want to stop renting. Come by the office. It's a free consultation, and you'll get to see everything I do. And I'll tell you exactly what you need to do, and then let's get you there.
All right, fantastic. Well, thank you so much. And any last thoughts? Any departing words? Anything else?
We'll do this again.
Yeah, we'll do another one. I think it'll be good. I think there'll be more things that'll come
Absolutely.
up.
Absolutely.
It'll be a series. If people like it and they have questions, we'll see the comments and all that stuff. I'll be happy to do this again.
Absolutely.
And really provide value.
I would be more than happy to come back, man.
Great, Armando. Well, great talking to you.
Thank you.